Hey everybody, it's Jane Johnston with the Bar Hill Group at Remax Wilson. Welcome to the Victoria Real Estate Show with...
Hey everybody, Andrew Plank here with the Vibe Real Estate Group, and thank you for joining us. And who have we got here today with us?
Jen Lowe from DLC Modern Mortgage Group.
Excellent.
DLC, Dominion Lending. Okay, so welcome everybody. How was your month of August? We've all been, well, I haven't really been off, but anyway, how's it been going?
I've been off. I just spent a couple of weeks in Portugal, and right now I'm up in Tofino. So, but yet it's been busy in between.
Awesome.
Yeah.
Sometimes it's busier when you're away, right?
It's always the transition when you're trying to get away and get everything lined up. I find that's the hard part, and the in-between stuff. So I came back from our trip to Portugal and had to hit the ground running, and Kim didn't see me for a week after we spent like every waking moment together. So it's kind of like I just disappeared because work, you know. That was a little unexpected, actually. Usually it's fairly slow in August, but everything came out.
I feel like it bumped up. Jen, how about you?
It was slower at the end of August for sure. Busy at the beginning. Last week of August was very slow for me. Everyone's getting ready for back to school, but if it's busier for you, then it'll be busier for me in another couple weeks.
Yeah.
Oh, right. Yeah.
Yeah.
You've got the lag time.
We're always delivering the business to Jen, right?
That's right. Yeah. Yeah.
Right.
And Jen, thank you again for helping out clients recently again with that problem that they had that the bank hadn't been able to help them with.
Yes, no problem.
Yeah.
Okay, so let's do our monthly update. So we're going to be talking about what happened in August, and then we're going to do a Bank of Canada update first. But let's just ask you, first of all, if you do like the show, please subscribe to us. We are on YouTube, and comment anything you want to know about real estate. We were happy to answer. And also please share this to somebody who you may know who might be thinking of buying or selling it in real estate. All right, Market Watch. So I'm going to be reading this out because Andrew cannot see the numbers. We have 296 new listings. The past week we have 101 pending. So we have a list to sale ratio of about 30%. Price decrease is 98. So a lot of people changing their tune now that we're getting into September. Price increases was 1, back on market was 5. And solds were 288. So we saw a lot of transactions happen at the end of August, which is normal, people wanting to get in. And we saw 161 expired. So some of those would have been relisted, just so you know.
Yeah, those are all interrelated, these stats. Interesting, the new listings to pendings is definitely much of a wider gap in that ratio than we've seen over the last few months.
Yeah. So we're looking low. Those are the last 7 days as of this past week. And it's also been a long weekend.
Weekend. And as you said, there's probably a lot of relists. So that might be disproportionate because it's beginning of the month.
Right.
Yeah.
Okay. Comparing August of 2024 to August 2023, we had 545 sales in August 2024. That's compared to 544. So we're on par for last year for August. New listings we're at 1,043 compared to 1,043 compared to 1,095. So again, pretty well on par. And active listings were higher at 3,191. That's up from 2,490.
That's a big difference.
Yeah, it's interesting too, though. Do you find, though, that the selection is higher, but it's just much, and yet buyers aren't really finding that selection palatable? It's just that maybe some of them are overpriced, or what is sticking on market may not be the ripest, most beautiful of fruits.
And the fact that the ratio is about 30% list to sale says to me that buyers are going, I know that they're being picky. What more is going
Yeah.
to be?
Yeah. What else is around the corner?
Right.
So
Yeah.
that being said, and we'll talk about this, but the interest rates have been coming down, and we are now past summer where both real estate agents and the public tend to take a bit of a break from real estate. Once the kids are back in school, once we're past, Labor Day long weekend and things start to just get back to the fall rhythm, we should see an uptick in activity. And I think especially because of these lower interest rates. So that inventory might start to get taken up.
Yeah, true. Yeah. And so just traditionally, there's going to be less choice, but there are also going to be better deals at the end of the year.
Mm-hmm.
All right, Jen, tell us what's happening.
So, Bank of Canada cut the overnight lending rate by 0.25%. So that dropped to 4.25%. I really like this slide here because it shows how, since going back to 2002, how prime rate versus the overnight lending rate has trended. And I got into mortgages specifically in just around 2012. And for the longest time period, prime didn't change. Like there was nothing happening. And then you go back a couple years here now, and it has been so volatile and changing so much that we are watching it so much closer than we used to, I have to admit. So what does this mean for people looking to get into the housing market or those that have a variable rate mortgage is that their cost of borrowing decreased by 0.25% as prime rate dropped to 6.45%. That will increase borrowing power potentially slightly. We do find right now, because where rates are, lots of people are looking and not necessarily going over with a variable rate mortgage yet, but I expect that trend to move towards variable rates as rates continue to come down.
Okay. So the one thing though is interesting. I was talking to a guy who he owns a lot of properties. He refinanced during COVID. So he's coming up for all of his renewals. He did fixed rates. So it's going to be a big shock for him to all of a sudden have these big expenses. But his dad said to him, and I was around during the 80s too, when we had 18 to 22%. Is variable the way to go? Because we have all who have been on variable have been stung very much.
Yeah. The prevailing wisdom was always variable is better, but it can't always be better. And this one hit, I think, a lot of people.
Well, and if going back to this slide, I mean, variable 100% was the way to go between 2008 to 2022. Was always lower than fixed. Right now, we're in a situation where current fixed rates are actually lower than variable rates.
Right. So we're looking here at the prime rate, which is the upper number, and then the Bank of Canada target for the overnight rate. What's the difference between those two different numbers?
Basically, the profit that the bank is getting is the difference between that 4.25% versus the 6.45%.
Because the big banks borrow from the Bank of Canada based on that rate. So they're always, that difference is what they're going to be charging you to make their money. Yeah.
Exactly. Yeah.
It's just like any retailer. You go, you buy from the wholesaler at this price and you sell to the public at the next price.
Exactly. Yeah.
Yeah.
there is, like in some of the stats in a presentation I was watching yesterday with our chief economist, Dr. Sherry Cooper. She was mentioning 70% of mortgages right now, new mortgages, are going into a 1 to 4 year fixed rate.
Oh, interesting.
Okay.
Mm-hmm.
Because they're banking on a lower fixed rate for now, and then hopefully a lower prime rate in the future, variable rate in the future.
And the Bank of Canada has been very slow. So we've seen 3 rate drops so far this year, totaling 0.75%. I was really hoping that they were going to drop rates more than a 1/4 percentage point.
Yeah, I'd heard that
yeah,
they were thinking of doing a half interest rate point.
Yeah, but then the labor market numbers came in, and unfortunately, they were higher than expected. So I think I'm speculating, but I think that's why they decided to stick with a 1/4 percentage point.
I want to point out that we say unfortunately, the labor rates were higher than expected is kind of a funny thing to say, but from the perspective of interest rates, it is unfortunate, but from the perspective of labor, it's a great thing. So there's just all these different pieces that the Bank of Canada has to take into nuances that they have to take into account.
Yes. Yeah. And what makes up those numbers too? Because there's a lot, there's been a lot of numbers that have been put out, but then a couple of weeks later, they've been backtracked and, oh, sorry, our unemployment numbers were actually incorrect. This has happened a few times in the States now. So the numbers can be a little bit skewed.
Right.
So people are doing 1 year fixed because they're wanting to see what happens at the end of 2025.
We're not seeing 1 year. We're seeing normally like 2 to 3 years is what we're seeing. What's starting to happen as well is those that are wanting to get out of they're say 4 years into their 5-year term. They're wanting to port their mortgage because they're at a rate of 1.84, for example. I just recently had this situation. So they want to port their mortgage, but their lender's 1 year rate is so high that it didn't actually make sense to port. It made sense to get a new mortgage.
Okay.
So we are starting to run into that.
That's when you talk porting their mortgage, you're talking about after they're buying a new home and they're porting over to the new home.
Yes.
Or is that
They're taking their mortgage with them.
Yeah. They want to keep that low rate, but they're finding that although they could keep the low rate, they're paying a higher rate on the other portion of the mortgage, and they can't make that work. So they're losing it to go with something that actually averages to a lower rate.
Exactly.
As a whole new mortgage. Okay. Got it.
Yeah.
This is why it's so important, folks, to consider all of these things and have a professional like Jen have a look at what you're planning to do, because what you think might be the best solution might not be.
Yeah, and you can overthink these things too, right?
Yes.
Yeah.
So we've got 2 more Bank of Canada rate decisions this year, October 23rd and December 11th. And we'll have to see what happens. We're really hoping that the overnight lending rate is going to get down to that 2.75% by the end of 2025. That's definitely trending towards moving away from fixed rates, going into the variable rates, as that variable rate will be lower than a fixed. Right now, it's not.
So what's variable right now?
Variable right now, based on prime, it would be 5.5%. And right now, you can get a fixed around 4.59. So there's a difference of 0.91%. So it just depends on how quickly the Bank of Canada decides to drop interest rates.
Okay. Alrighty. Andrew has taken off somewhere, so we're just gonna go where he's up in Tofino on holiday.
Yes, on the beach.
On the beach. So we're just going to look at the total active listings over the past 2 years. About 2 years ago, we were just under 2,200, and we dipped down to that last year in December. And then we have recovered since December, which is a typical normal end of year low. We peaked in June of this year, which is why we, I guess, felt it was slow. And we'll see that in the list to sale ratio. And we've dropped down to just about 3,200 right now. So year over year, we're up, as we said before, about a third. And then here's the list to sale ratios looking. So you can see there's listings that follow trend in the market. So in the early spring, we tend to see number of listings go up. We definitely saw that this year with a peak in May. And I know clients who initially we were trying to get ahead of the trend, but we can see the sales were also low at the beginning of the year. They peaked in May as well. We saw a little bit of a bump in July again, and then we've decreased in August as people have gone off on vacation. So following a sort of more normal trend, I'm expected to see a little bit more listings coming out in September, October, and we'll see our fall bump start to happen, and then it should trend down in October, November.
And December, and even not down in January, but be pretty slow.
Yeah.
Yeah.
So this is the list to sales ratio, and you can see when it's above 30%, we are in a seller's market, but we are now firmly in a balanced market at 20%. So that means for every 5 listings, 1 is selling. So this means a lot of people think when a sign goes on the lawn that that house is for sale and that it's going to sell at that current list price. And that's not true. Only 1 in 5 listings is selling at the moment. So we have an absorption rate now of 5 months.
Yeah.
So that's quite a long time.
Yeah.
So your days on market is going to be longer than it was during COVID when we had maybe like a week.
I want to clarify something there, though.
All right, moving
Jane,
to single family homes.
can
2
you hear me,
years
Jen?
ago, we were around 1.25 and close to 1.3. We have stayed fairly steady over those past 24 months, and we're just about 1.25 now. We did peak in July of 2023, so we had a hot summer last year, but it appears to have gone back. And I think if we look at it from a distance over time, we're going to see that it was pretty flat market. Thoughts on that,
Jane,
Andrew?
Can you hear me, Jane? Can you hear me?
Oh, you're muted.
I'm not muted.
Not to me.
No.
Can you hear me? No?
Can't hear you. Not sure what happened there. Okay, condo market, again, same thing. And we're looking fairly flat over the past 2 years. So we peaked in May of last year at just about 675. We went down seasonally for December around 550. And so when you're purchasing a condo in time, when you're looking at when you have to buy versus when you can buy, it's a great opportunity in the fall market when other people are maybe moving away from purchasing to start looking at making your own purchase yourself so you can get a deal and selling at the high market. And of course, just like stocks and bonds, right? You buy low and sell high. Andrew, are you
Jane,
back on?
Can you hear me now? No?
Nope,
Can't
can't
hear
hear you.
Okay, I'm gonna call out and
Okay.
back.